Today we're diving into one of the most talked about developments around AMC Entertainment as of June 18th. There's been a lot of discussion across the retail investor community about synthetic shares, rising failure to deliver numbers, potential gamma squeeze scenarios, and even speculation that CEO Adam Aron may be subtly hinting at future price targets. Whether or not you buy into every theory, there are several developments investors are watching closely, and that's what we're breaking down today. Welcome back to AMC Daily. If you're new here, consider subscribing and turning on notifications so you don't miss an upload. This video is for educational purposes only. It is not financial advice, so always do your own research before making any investment decisions. One of the biggest topics right now is the growing attention on AMC's failure to deliver data, often called FTDs. What's interesting is that while a lot of media coverage suggests nothing significant is happening with AMC and that the short squeeze narrative has run its course, the data many AMC investors are looking at seems to tell a different story. According to a lot of retail investors, persistently high FTD numbers suggest short sellers may still be heavily involved with the stock. Their reasoning is that if short positions had genuinely disappeared, there would be little reason for FTD levels to stay elevated. Instead, investors point to repeated stretches where AMC shares were reportedly hard to locate and deliver. Supporters of this view often point back to AMC's history. Back in 2021, despite the stock's dramatic run, many believe short sellers had trouble locating shares. Similar conversations came up again in 2023 when AMC traded at much lower prices, and even during recent stretches when the share price was significantly depressed, investors kept pointing to ongoing FTD activity as evidence that some market participants were struggling to obtain shares. This is why liquidity conditions remain such a focus for a lot of AMC investors, the logic being that if shares were genuinely easy to borrow and locate, persistent delivery issues shouldn't keep showing up. The fact that this conversation is still happening today has led many retail traders to conclude short sellers remain under pressure. Another point getting a lot of attention is the timing of certain FTD settlement windows. Investors have been discussing a notable jump in FTD activity during May, and using T+35 settlement math, many traders flagged June 18th as a date worth watching. What makes this more interesting is that some analysts, along with AI-generated forecasts, have floated the possibility of higher volatility around that same window. No prediction is guaranteed, but many AMC investors feel several factors may be lining up at once. First, AMC has cleared several key price levels traders were watching, pushing above $1.50 and later above $2. Those breakouts drew attention because more options contracts became relevant as the price climbed. Now investors are watching the next level around $2.50. The argument here is that each breakout adds pressure within the options market. As more calls move into profitable territory, market makers may need to adjust their hedging, creating the kind of conditions some investors associate with gamma squeeze potential. Because of this, AMC supporters are hoping to see strong closes above resistance levels, the thinking being that the higher the stock can establish itself, the more bullish momentum could build, according to a lot of technical traders. Some are already looking past $2.50 toward future levels like $3, $4.50, and even $5, believing each successful breakout draws more attention from both retail and institutional investors. At the same time, a lot of traders are closely watching options activity. In the money call options have become a major focus since they carry more direct influence than highly speculative out-of-the-money contracts, with the thinking being that increased activity in these contracts could add buying pressure if exercised. That said, AMC investors also recognize that major rallies rarely happen without pushback. Throughout AMC's history, many retail traders have argued that big moves tend to come with heavy volatility and aggressive attempts to hold the price down. That's part of why June 18th became such a widely discussed date, the idea being that if several bullish catalysts line up at once, volatility could increase significantly. Adding to this, some well-known figures in the AMC community have pointed to what they see as unusual behavior in certain trading algorithms, citing intraday price action and market structure as signs that algorithmic systems may be having a harder time controlling price movement. Whether or not that holds up, many investors believe AMC has recently shown signs of more natural price discovery, and argue that each green day might only reflect a fraction of the stock's true value if synthetic positions are as large as some estimates suggest. That brings us to one of the most debated topics in the AMC community: synthetic shares. Many retail investors point out that official short interest figures look fairly modest next to some of the estimates circulating online. While the official numbers suggest a smaller short position, some analysts argue true exposure could be far larger once synthetic shares are factored in. One widely shared estimate puts total synthetic exposure above 2.1 billion shares. It's worth noting these figures are speculative and not officially verified, but many AMC investors use them to explain why FTDs remain elevated even as official short interest looks lower. Their reasoning is straightforward. If synthetic shares exist at meaningful scale, delivery issues would make more sense, since market participants would effectively be dealing with obligations well beyond the officially reported share count. Many supporters believe this helps explain why short interest metrics and actual market behavior sometimes seem disconnected. Another development involves share availability. Data showing millions of shares available to borrow has sparked debate in the community, with some investors seeing it as a sign of additional synthetic creation behind the scenes, while others think hedge funds may simply be preparing for future volatility. A common theory among AMC bulls is that institutions often position themselves ahead of major market events, and that maintaining access to borrowable shares could be a strategic move if a significant price move were approaching. At the same time, investors keep discussing the possibility of a modest gamma squeeze. Even though modest might sound minor, many traders argue that even a relatively small gamma squeeze could produce sizable gains. For an ordinary stock, a modest gamma squeeze might move shares several 100%. AMC investors believe that because of the alleged synthetic exposure, even a moderate move higher could trigger effects not typically seen in other stocks. Under this theory, a move towards $6, $8, or even $10 could add growing pressure on short positions, and as more positions become unprofitable, additional buying pressure could follow. Beyond the technical side, many investors are also focused on AMC's improving business fundamentals. The movie industry has shown real signs of recovery, and many AMC supporters remain optimistic about upcoming box office performance, believing strong releases could meaningfully boost revenue in coming quarters. This is where a lot of long-term investors feel short sellers may have miscalculated. Over the past several years, many retail shareholders have kept buying shares while lowering their average cost basis. Supporters argue this mix of long-term conviction and continued buying has made it harder for short sellers to close out positions easily. As AMC moves through important price zones, investors are watching both technical and psychological levels. Technical levels matter because they influence chart-based traders, while psychological levels matter because they influence investor behavior more broadly. For example, a move above $3 could draw more attention, a move toward $6 could unsettle bearish traders, and a move toward $10 could add even more pressure as more positions slip into losses. That's part of why many AMC investors treat every breakout level as meaningful. Sentiment around AMC also appears to be shifting. Even some outlets that were previously negative have started acknowledging the company's recent strength, and coverage highlighting AMC's performance following its capital raise has led many investors to feel the broader narrative is starting to change. Another topic getting attention involves Adam Aron directly. Some investors noticed a social media post where he discussed future box office expectations and included numbers that sparked speculation among AMC supporters. Some community members believe those numbers may contain hidden clues about future milestones, pointing to figures like 26 or 75 as possible symbolic references to price levels, while others dismiss the idea entirely. Regardless of where people land on this, AMC investors continue closely analyzing Aron's public comments, believing he occasionally drops subtle hints about the company's direction. Many supporters also argue AMC's recent fundraising was aimed at strengthening the balance sheet rather than propping up a failing business, and that theaters remain a viable business with stronger financial flexibility, positioning AMC to capitalize on future opportunities. Finally, many traders are keeping an eye on broader liquidity indicators, including reverse repo activity, since shifts in liquidity conditions often draw attention for their potential impact on leveraged market participants. Some investors noted a sharp rise in reverse repo usage around the same time AMC posted notable gains, interpreting that as a possible sign of growing pressure within the financial system. Put all of this together, FTDs, options activity, potential gamma squeeze conditions, improving fundamentals, rising box office expectations, key psychological price levels, synthetic share theories, and liquidity concerns, and it's easy to see why AMC investors feel the coming weeks could matter a lot. Whether all of this ultimately leads to the kind of major move many investors are expecting remains to be seen. But one thing is clear. AMC continues to be one of the most closely watched stocks in the market, and both bulls and bears will be paying close attention to what happens next. That's it for today. What's your take on AMC stock? Let us know in the comments, and thanks for watching.